Every budget has that one number that quietly shapes everything. How much the government can spend, how much it must borrow, and how stable the economy really is. And that number is the fiscal deficit. And it affects you more than you might think. Fiscal deficit is the gap between what the government spends and what it earns in a year, excluding borrowing. In simple terms, when government expenditure exceeds government income, the shortfall is called the fiscal deficit. That gap tells us how much the government needs to borrow to keep the economy running. Let's take a simple example. If a government spends $1 trillion in a year but earns only $900 billion, the fiscal deficit is $100 billion. And this deficit can be shown as an absolute number or as a percentage of the economy's size, that is, as a share of GDP. This percentage is what economists and markets watch really closely. Fiscal deficit reflects the government's financial health. Borrowing isn't always bad. If used well, it can fund infrastructure, education or healthcare, investments that support growth and productivity. But borrowing also comes with limits. A high or uncontrolled fiscal deficit brings risks. It can push up inflation, make loans more expensive, increase interest costs for the government, and weaken investor confidence. Over time, that can mean fewer jobs, slower growth, and a higher cost of living. A persistent high one makes life more expensive. And several factors determine how large a fiscal deficit becomes. The economic environment matters. When growth slows or unemployment rises, tax collections fall while spending pressures increase. And government strategy matters too. And higher spending on welfare or infrastructure without matching revenue growth widens the deficit. And external factors such as global inflation, high oil prices, trade disruptions or international slowdowns can strain domestic finances. So when the government borrows money, the question is, where does it spend it? On day-to-day expenses or on building long-term assets? That's where capital expenditure comes in. In the next episode of Budget Basics, we break down what that means and why it matters. This is Budget Basics by Business Standard, breaking down the budget without the jargon.